He wasn't a general. He didn't command armies or lead political revolutions. Yet, in a quiet, calculated way, he changed the destiny of a nation. His name is barely remembered today, not carved on monuments, not taught in schools, but every time money moves through a Chinese bank, every loan, every transaction, every savings account carries a trace of his ideas. While history celebrates emperors, revolutionaries, and businessmen who shouted their ambitions from the rooftops, this man built an empire out of silence, one that transformed China from a struggling, fragmented nation into an economy capable of standing beside the world's greatest powers. He didn't do it with soldiers or slogans. He did it with something far more powerful: trust. Because in the early 1900s, China's financial system was chaos. Corruption was everywhere. Foreign banks controlled the country's money, and most ordinary people didn't even have a place to safely store their earnings. The few local banks that existed were run like private clubs for the elite. For the average farmer or shopkeeper, the idea of saving was almost impossible. But then came K.P. Chen, a young man from Jiangsu province, raised in a time when China was fractured, humiliated by foreign powers, and desperate for stability. He saw something others didn't: that a truly modern China couldn't be built on politics alone. It needed a financial foundation strong enough to support the dreams of millions. Chen would go on to create a banking system that changed how Chinese people thought about money, from secret silver hoards buried in the ground to modern accounts, savings, and loans that fueled small businesses and industries across the nation. He built one of the first truly modern banks in Chinese history, the Shanghai Commercial Savings Bank, with just 4 employees and 80,000 yuan in capital. It would grow into a nationwide financial powerhouse, rivaling even foreign institutions. Yet despite everything he accomplished, surviving wars, economic collapse, and political purges, his name faded into obscurity. No statues, no grand biographies, just a quiet legacy that shaped every modern financial institution that came after him. This is the story of the forgotten banker who built modern China, a man whose vision outlasted every empire, every regime, and every revolution. But before he built his empire of trust, he was just another young man chasing an impossible dream halfway across the world. Before the skyscrapers of Shanghai touched the clouds, before the factories and financial centers defined China's modern image, there was a boy named Chen Guangfu. Born in 1881 in a quiet corner of Jiangsu province. His family was humble, not wealthy merchants or government officials, but they valued something far rarer in late Qing dynasty China: education. Back then, China was a wounded empire. Foreign soldiers patrolled its ports. Silver was being drained by unfair trade, and local officials sold influence like merchants in a marketplace. Every young man was told the same thing: the country's future lay in war, not in numbers. But Chen's parents saw something in him, a hunger for understanding how the world actually worked, not just how it was ruled. As a student, Chen showed a mind that refused to accept limits. He wasn't loud or confrontational, but his curiosity was relentless. He studied mathematics, foreign languages, and the structure of government, trying to piece together why nations like Britain and America were thriving while his own country seemed trapped in decline. It wasn't long before he realized the answer wasn't just about politics or military power, it was about money. Money not as coins or silver, but as trust, the invisible belief that gives value to everything a society builds. And so, at a time when few Chinese citizens had ever traveled beyond Asia, Chen took a leap of faith.
With support from reform-minded sponsors, he boarded a ship bound for the United States, a 3-week journey across rough seas that would change not just his life, but the future of his entire nation. When he arrived in Philadelphia, K.P. Chen, as he came to be called, stepped into another world. The year was 1906. America was bursting with invention. Electric lights illuminated entire cities. Railroads stretched from coast to coast, and factories roared with the energy of modern capitalism. And at the center of that transformation was the Wharton School of Finance, one of the most advanced business schools in the world. Chen wasn't just another foreign student. He was one of the first Chinese scholars to study modern finance at that level. At Wharton, he was surrounded by future bankers, economists, and industrialists who spoke the language of risk, investment, and opportunity. But what fascinated him most wasn't the wealth, it was the system. He watched how banks weren't just places to store money, they were engines that powered communities. Ordinary workers deposited small savings, businesses borrowed capital, and the cycle created prosperity that spread outward. This wasn't just arithmetic. It was a philosophy. Chen began to see that what made the West strong wasn't its factories or armies. It was its faith in the institutions that handled money. People believed in their banks. That belief gave their currency power. For a young man from a country where people still buried silver in the ground, this was revolutionary. He once wrote to a friend, "A nation's wealth is measured not by how much gold it owns, but by how much its people trust their banks." That idea would become the cornerstone of his life's work. When Chen returned to China around 1910, he stepped back into a country that had changed, but not for the better. The Qing dynasty was collapsing. Revolution was in the air. Warlords ruled in chaos, each issuing their own currency, often backed by nothing more than brute force. Inflation was rampant, corruption common, and most people had no access to safe banking at all. Foreign powers, British, American, Japanese, controlled most of the big banks in the cities. If a Chinese business owner wanted a loan, he'd often have to turn to foreign bankers who treated local clients with disdain. Chen was outraged, but he wasn't emotional. He was strategic. He saw that China didn't just need a new government, it needed a new financial backbone, a system run by Chinese people for Chinese people, built on professionalism and trust rather than power and corruption. So, while revolutionaries grabbed rifles and politicians fought for power, Chen picked up something else: a notebook, a ledger, and a plan. He began studying how to merge Western financial systems with Chinese cultural values. The discipline of accounting with the Confucian idea of social responsibility. His goal wasn't to imitate the West, but to create a uniquely Chinese model of modern finance. By 1915, he was ready. In a small rented office in Shanghai, with just 4 employees and 80,000 yuan in starting capital, he founded the Shanghai Commercial Savings Bank. No one took him seriously at first. The foreign banks mocked him. Local warlords saw no profit in it. Even some Chinese businessmen thought the idea of a savings bank for ordinary citizens was naive. But Chen didn't need their approval. He wasn't chasing prestige, he was building a foundation. And with that modest beginning, he would set in motion a financial revolution that changed the way millions of Chinese people thought about money, work, and the future. Because what started in one tiny office in Shanghai would soon grow into one of the most trusted and respected banks in Asia, a symbol of China's rise from chaos to confidence.
Shanghai, 1915. The city was alive with contradictions. Horse-drawn carts beside automobiles, rickshaws weaving past neon-lit hotels, and the hum of new machines mixing with the shouts of street vendors. It was the beating heart of a country struggling to modernize. And in the middle of it all, KP Chen decided to build something that didn't yet exist in China, a modern, trustworthy bank for ordinary people. He called it the Shanghai Commercial and Savings Bank, or simply SCSB. The name sounded simple, but the idea behind it was revolutionary. At that time, the word bank in China often meant danger. Most so-called banks were small family-run operations or pawn shop-like institutions that charged high interest, disappeared overnight, or were under the control of corrupt warlords. People didn't trust them, and for good reason. Chen wanted to change that. With just 4 employees and 80,000 yuan in starting capital, he opened a modest office on Ningbo Road in Shanghai. No foreign backers, no government support, just to believe that honesty, discipline, and customer service could outlast corruption and chaos. He personally trained his staff to treat every customer, rich or poor, with respect. He insisted that the bank's ledgers be spotless, that interest be paid on time, and that promises be kept to the letter. These small details to Chen weren't just good business, they were moral obligations. He even created a slogan that captured his philosophy: serve society, support industry, and promote international trade. To him, a bank wasn't just a place to store money, it was a bridge between people's effort and their future. One of Chen's most brilliant ideas was the introduction of small savings accounts, sometimes called the $1 savings plan. In a country where most people thought banks were only for the wealthy, Chen encouraged everyday workers, tailors, shopkeepers, even students, to deposit just $1 silver at a time. He believed that once people learned to save, they would learn to trust. And once they learned to trust, the entire nation could grow. To make banking accessible, he set up small wooden boxes around local shops, allowing people to drop coins into them daily, a concept similar to a piggy bank, but directly connected to their real savings account. Within a few years, thousands of people who had never used a bank before were opening accounts at SCSB. And as confidence grew, so did the bank. By the early 1920s, SCSB had expanded beyond Shanghai into major cities like Nanjing, Tianjin, and Guangzhou. What began as a one-room operation was turning into a financial movement. But growth in China during that era was never easy. The nation was being torn apart by rival warlords, and every powerful figure wanted control over the banks. Foreign institutions dominated trade and often manipulated currency to their advantage. When one local warlord tried to pressure Chen into financing his military campaign, Chen refused. He famously told him, "A bank is not a weapon, it is a trust." That single act of defiance became legendary among Chinese businessmen. It showed that the Shanghai Commercial and Savings Bank was not a tool for corruption, but a beacon of integrity. Under Chen's leadership, SCSB introduced Western-style accounting systems, professional audits, and employee training programs, innovations unheard of in most Chinese institutions at the time. He even hired women, a radical move for a conservative society, believing that honesty and skill mattered more than gender. By the early 1930s, the numbers spoke for themselves. Over 2,700 employees, 111 branches nationwide, and millions of yuan in deposits.
It had become one of the most respected financial institutions in Asia and entirely Chinese-run. But success didn't make Chen arrogant. When asked about his accomplishments, he simply said, "A bank is not measured by its size, but by the confidence of its people." Behind the marble counters and tidy ledgers, Chen was quietly building something far larger than a company. He was building the financial identity of modern China. Yet, as the nation entered the storm of the 1930s, that identity would be tested like never before. Because no matter how strong the vaults or how pure the intentions, war was coming, and with it, the most difficult chapter of Chen's life. What happens when a banker's greatest enemy isn't competition, but invasion?
By the early 1930s, the Shanghai Commercial and Savings Bank was no longer just a financial institution. It was a symbol of what China could become. While the rest of the country was torn between rival warlords and political uncertainty, KP Chen's bank stood for something China had almost forgotten: stability. Everywhere you looked, China was changing. Skyscrapers were rising in Shanghai, radios crackled with news from abroad, and the city's skyline shimmered with neon lights. But behind the glamour, the nation's foundation was fragile. Inflation was climbing, corruption was spreading, and foreign powers still dominated large parts of the economy. KP Chen understood something few others did. Modernization wasn't just about factories or machines, it was about trusting the system that financed them. So while others chased power, Chen focused on innovation. He introduced systems that were decades ahead of their time: Western-style audits, transparent financial reporting, professional training programs, and standardized banking procedures. His vision was to create a Chinese bank that could rival those in London, New York, or Tokyo, but remain proudly independent. He didn't just copy the West, he adapted it. For example, he created what he called the small savings revolution. Instead of chasing large corporate accounts, Chen focused on the everyday worker: a rickshaw driver, a seamstress, a shopkeeper, people who had never trusted banks before. Through small savings boxes, monthly deposit programs, and community outreach, he taught millions of ordinary Chinese that saving even $1 a week could change their lives. In a society built on hierarchy and wealth, this was radical. By 1934, the Shanghai Commercial and Savings Bank had become a financial powerhouse. Over 100 branches, 2,700 employees, and deposits reaching into the tens of millions. It wasn't just a business success, it was a cultural one. People began to call Chen China's banker of the people. But even as the numbers soared, Chen knew something darker was brewing. Japan's imperial ambitions were expanding rapidly. Military clashes were already erupting along the northern borders, and Shanghai, the country's commercial heart, was in danger. Then, in 1937, the nightmare arrived. The Second Sino-Japanese War broke out, and the Japanese army invaded Shanghai. Bombs fell over the city, buildings crumbled, and foreign concessions turned into war zones. While many bankers fled, abandoning their posts and locking their vaults, KP Chen refused to run. He ordered his employees to focus on one mission: protect the people's savings at any cost. In one of the most daring operations in modern Chinese banking history, Chen and his staff worked day and night to transfer the bank's gold reserves and critical documents out of Shanghai, by train, by ship, even by hand, to safer cities in the interior. They disguised bags of cash as sacks of rice to avoid being looted. In some cases, employees risked their lives to carry deposit ledgers across Japanese lines. Chen personally oversaw the relocation, setting up temporary branches in Wuhan and Chongqing to keep the bank alive while bombs fell over Shanghai. It wasn't just about saving money, it was about saving faith. Even in wartime, Chen made sure customers could still withdraw their savings and businesses could still access loans. That continuity,
That unbroken promise made SCSB one of the few institutions that ordinary people still trusted when everything else had collapsed. And remarkably, the bank survived. Through war, displacement, and chaos, Chen's leadership kept the system running. When other banks defaulted, he delivered. When others surrendered to foreign control, he stayed independent. His guiding principle never changed. A bank's duty is to its depositors, not to the powerful. By the time the war ended in 1945, the Shanghai Commercial and Savings Bank had become more than a business. It was a legend. Chen had proven that even in the darkest moments of history, integrity could be stronger than any army. But the end of one war only marked the beginning of another challenge, one that no amount of financial skill could fully prepare him for. Because as China celebrated victory against Japan, a new storm was already forming. A political revolution that would sweep away everything Chen had built. And when that storm hit, the man who built modern China's financial backbone would face his greatest test: survival.
When the war against Japan ended in 1945, Shanghai erupted in celebration. Firecrackers thundered through the streets, parades rolled past shattered buildings, and people flooded back to their city, desperate to rebuild their lives. For the first time in almost a decade, peace, or what felt like peace, had returned. And standing quietly among the wreckage was K.P. Chen, the man whose bank had survived the unthinkable. The Shanghai Commercial and Savings Bank had not only endured war, but had grown stronger because of it. While other institutions collapsed, Chen's steadfast leadership had preserved both money and faith. His name had become synonymous with integrity. But peace in China never lasted long. The moment the Japanese withdrew, a new conflict began, this time not with an external enemy, but within the nation itself. The Chinese Civil War reignited between the nationalists led by Chiang Kai-shek and the communists under Mao Zedong. And as the battle for China's future raged, Chen found himself trapped between two forces far more dangerous than bombs: politics and ideology. Chen was no politician. He had always avoided aligning with any side, believing that a true banker must remain neutral, loyal only to his depositors. But neutrality is a luxury that rarely survives revolutions. Both factions wanted control of the country's financial system, and Chen's bank was one of the largest in China. The nationalists saw it as a key to funding their armies. The communists saw it as a symbol of the old capitalist order. To both, it was power. As the nationalist government retreated to Nanjing, Chen was pressured to move his operations there. He complied, reluctantly, wanting only to protect his employees and their clients. But even within the nationalist system, corruption was rampant. Officials demanded favors, loans that would never be repaid, and political loyalty in exchange for protection. Chen refused. He told a colleague, "If a bank serves politics, it can no longer serve its people." That defiance earned him enemies in powerful places. By 1948, inflation had spiraled out of control. The nationalist government's reckless printing of money had destroyed the value of the Chinese yuan, and panic spread through the economy. People lined up outside banks demanding withdrawals, terrified that their savings would vanish overnight. And yet, in the midst of the crisis, Chen's Shanghai Commercial and Savings Bank once again became a refuge. He refused to freeze accounts or close doors. He instructed every branch to honor deposits even if it meant depleting reserves. It was to him a matter of principle. The trust of the people came before survival. But by 1949, the writing was on the wall. The communists had taken Beijing and were advancing toward Shanghai. The nationalists were collapsing, and chaos was consuming the last remnants of the republic. As the People's Liberation Army entered Shanghai, Chen was faced with an impossible decision: stay and risk everything under the new regime, or flee and try to preserve what little of his life's work. He chose survival, not for himself, but for the institution he had built.
In the final months of 1949, Chen secretly arranged for key staff, records, and assets to be evacuated to Taiwan. He refused to call it an escape. He called it a continuation. He was heartbroken. Shanghai, the city he had helped modernize, was falling into an era of uncertainty. The new communist government nationalized the banks, declaring private institutions relics of the past. Within months, the Shanghai Commercial and Savings Bank, once a pillar of trust and modernity, was shut down on the mainland. Chen, now in his late 60s, relocated to Taiwan with a handful of loyal employees. There he began again, quietly, patiently, rebuilding his bank from the ground up. No grand speeches, no complaints, just work. The new government in Taiwan recognized his value, and slowly the reborn SCSB became part of the island's growing economy. But Chen himself stayed out of the spotlight. He never sought fame or political favor. He lived modestly, spending his later years mentoring young bankers and writing about financial ethics, a topic that had defined his entire life. He died in 1976, far from the city where it all began. His name faded into the background, overshadowed by the larger political dramas of the 20th century. But quietly, without fanfare, the legacy of his work lived on. The bank he founded in Shanghai survived in Taiwan and would later expand internationally, opening branches in Hong Kong, Singapore, and even the United States. And though few remember his name, every one of those institutions still carries the same founding motto: serve society, support industry, promote trade. K.P. Chen may have lost his country, his buildings, and his recognition, but he never lost the one thing that truly mattered: trust. And in the decades that followed, as China rebuilt itself into a global powerhouse, that single word, trust, became the invisible bridge between his forgotten past and the modern world he helped create.
Today, China is synonymous with towering skylines, booming trade, and the hum of digital payments. Its banks are among the world's largest, and trillions of dollars move through its financial arteries every day. But hidden beneath this modern machinery lies the quiet fingerprint of one man who dared to build trust when China had none: K.P. Chen. Most people have never heard his name. In history books, he's often reduced to a footnote, overshadowed by generals, politicians, and revolutionaries. Yet, what Chen created, a system built on honesty, service, and discipline, became the DNA of China's financial modernization. To understand his legacy, you have to remember what China's economy looked like before men like him. In the early 1900s, banks were fragmented, trade was local, and savings were hidden in mattresses or buried underground. The idea of a trustworthy national bank was almost unthinkable. Chen changed that. His bank was the first to treat ordinary people as clients, not as risks. Farmers, factory workers, and small business owners could walk into his branches and feel safe depositing their money. That sense of security rippled through the economy. It allowed trade to expand, industries to grow, and local entrepreneurs to dream bigger. In a sense, K.P. Chen built not just a bank, but a mindset, one that said, finance is not about numbers, it's about people. This philosophy outlived him. Even after the Communist Revolution erased his name from mainland institutions, the standards he set became silent blueprints for future generations of Chinese bankers. When the People's Republic of China began reforming its economy in the late 1970s, reopening to private business and global markets, the first thing it needed wasn't factories or foreign investors, it needed trust. The same principle Chen had championed 50 years earlier. And ironically, the modern financial system that emerged, built on savings, lending, transparency, and industrial support, looked remarkably similar to what Chen had been doing before the revolution. In Taiwan, meanwhile, the Shanghai Commercial and Savings Bank that Chen rebuilt became one of the island's most respected financial institutions. Its employees called him Lao Chen, the Old Master. His lectures on ethics and integrity were mandatory reading for new recruits. Even after his death in 1976, the bank continued to honor his principles. When asked about Chen decades later by one of his protégés, he said, "He taught us that banking was not a job, it was a duty to guard people's hope." And that's what makes his story so hauntingly relevant today.
In an age dominated by speculation, greed, and digital currencies flashing across screens, his simple truth still cuts through. A bank's true currency isn't money, it's trust. Every time a Chinese entrepreneur receives funding, every time a farmer gets a microloan, every time a citizen deposits their wages into a bank believing it will be safe, that invisible thread of trust runs back to Chen's desk in 1915 in that small Shanghai office where one man dared to believe China could be financially honest. KP Chen never saw himself as a hero. He wasn't chasing fame or wealth, he was chasing stability, something his country had always lacked. And through decades of war, inflation, corruption, and exile, he proved that even in chaos, integrity can endure. Today, the skyscrapers of Shanghai's financial district gleam with wealth and ambition, but somewhere in the quiet pulse of that global machine beats the same principle Chen wrote in his first company charter over a century ago: to serve the nation through industry, to uplift the people through credit, and to build the future through trust. He didn't just build a bank. He built the foundation of modern China's financial soul, and history, at last, is beginning to remember his name.